Hey, what's up YouTube? Sam with the Home Outliers. Hope you're all doing awesome out there. Today's video is going to be covering stock market loss strategies, what to do when you're down on a stock, how you should overcome this, strategies of what you can do, long-term plans, and options that you can take advantage of. Before we start, please smash that like button down below for the YouTube algorithm. Also, please subscribe if you haven't already. I greatly appreciate the support. Any little help I can get definitely helps my channel grow, so I really greatly appreciate that. And also, quick disclaimer, I am not a financial advisor, and this is meant to be for entertainment purposes as well as for me documenting my investment journey and strategies I'll be looking at doing. Alright guys, so as we all know, with stocks there comes their risk, and as well it comes with the opportunity for some awesome gains. But with those risks, there's potential to lose money. And those money is not really lost until you've what they've called lost that, and you've actually closed that and sold that off for a loss. There are times like currently right now in my M1 finance portfolios, you can see it's down in my property REITs, my airline, and my financial sectors. This portfolio has been getting trimmed quite a bit. I've been moving money around. I've been looking at buying more in the whole shares, buying stocks in the market, especially with all the volatility. But with that, there are times when you are buying a stock, whether you thought it was a good time to buy or what happened, pretty recently within the March downturns, where if you bought them in January and February, all of a sudden you were blindsided and your portfolio took a massive hit. And you can see here, I bought Boeing stock, and this is my portfolio, one of my investment accounts. In Fidelity, I have different investment accounts, but this is one of the accounts that I have in Fidelity. You can see that, Boeing is down 56%, Waste Management's down 15%, Constellation Brands is down 6%. So, with that, there's going to come a point where you're going to have to come up with a strategy about what you're going to do and how you're going to best overcome this. It's pretty common for a lot of us to just want to hang on to it and hope that it returns back to what it was. But if you look at it from a number standpoint, it's a pretty tough hurdle to overcome. So if you're looking at Boeing, it says 56% down to get back to where it was. Really, it's going to be over 100% that this stock needs to move in order for me to break even or get my money to where it was. This is an account that is my IRA account, so the time horizon is not a big issue for me, but it brings the dilemma of, are there better opportunities out there should you cut your losses? And are there other opportunities where you can, get more potential for gains and potential growth out of it? Or is this money just stagnant? So going over some of these loss scenarios and strategies to consider, the first one is called a capital loss. And this is the loss where it's, it's in the simplest and purest form. And this is when you buy a stock and then you just watch it plummet, especially what happened with, the COVID-19. So, there's going to come a point where you're going to have to sell this. You're going to have to take that loss. And it'll be called a capital loss. And it's going to be, at the price that you sell it at. But, with that, you can use this capital loss to offset a profit from selling a capital asset, which is known as a capital gain for tax purposes. A capital loss or gain is characterized as short term if you own the asset for 1 year or less. If you own the asset for more than 1 year, the loss is considered to be long term. And another loss scenario to consider is the opportunity loss. With this type of loss, it's somewhat less painful and harder to quantify because it's all relatively speculative, but it's still somewhat very real in the fact that, as for an example, you may have bought 10,000 of a hot growth stock, and 1 year later, after some up and downs, the stock is very close to what you paid for it. Example of this is Alibaba. I bought a lot of this stock. I bought it in the 200s, and for basically the whole year, it's been stuck in that range. So with that, you're often tempted to tell yourself, well, at least I didn't lose anything, but that's not necessarily true, because if you tied up 10,000 of your money in an Alibaba stock and it didn't move, you received nothing in return. Whereas if you had held that money somewhere else, let's say a CD, a certificate of deposit, you would have at least earned a little bit of interest. And this is known as an opportunity loss or opportunity cost. When a stock goes nowhere or doesn't even match the risk of a low risk return on a bond, you've experienced an opportunity loss. The chance to have made more money by putting your money in a different investment. It's basically a trade-off that caused you to lose out on another opportunity. And these ones, like we were talking about, are very tough to quantify, but they do exist because you're taking your money and you're putting it somewhere where you're expecting it to have a return or expected growth. However, if it's stagnant and doesn't move, there's that risk of that you missed out on something. Now, another loss scenario to consider is the missed profit loss. Let's use, for example, Tesla stock. Tesla stock has been on a roller coaster. At one point during the year, it went as low as 200s, even to the 150s we've seen before. 176 is the 52 week. You can see that it's reached 800, 900 in February, and then it fell. With this type of scenario, what we're trying to point out is the fact that this type of loss is when you watch a stock make a significant run up and then fall back. Something that can easily happen with most volatile stocks. Not many people are successful at calling the top or bottom of a market or an individual stock. You might feel that the money you could have made is lost money that you could have had if you just sold the top. It's always hard to call selling at the top. I had purchased Tesla shares before as well, and I sold out at 300 because I thought I was getting good profit out of it, which I did get a good return out of it. But had I held longer and look at where it's gone up to 800. These scenarios are tough. And just like me, many investors sit tight and hope that the stock will recover and regain, or maybe even my scenario, hoping that it will drop again so I can get back in. But those scenarios may never happen. And if it does, some investors may be tempted to hold on again, hoping for even greater profits, or wait for it to retreat and buy in. So the best cure for this type of strategy is to really have an exit plan in place, or have a strategy in place that you're completely happy with if you reach a reasonable profit. With this stock, Tesla and other stocks such as volatile as this, it's very sensitive to any type of news coverage or bad press or even positive press. So, with that, it's always important to do your due diligence when researching your stocks. Don't buy into what's going on in the fear or the FOMO that's going around. And if you're going to have a plan in place for Tesla or any type of stock situation like this, be comfortable with the exit strategy that you've come up with beforehand and the profit that you'll be taking from it. In another type of loss scenario, I think it's just great to look at the comparison of the Bitcoin situation and the trap that a lot of us probably fell into. As you know, Bitcoin at its peak reached in 2017. It reached 19,000. It fell hard ever since, and it's never recovered since. And I'm part of that boat that bought Bitcoin, maybe not at 19,000, but I did buy it when it was, in the mid 14, 15,000s. And that was just a great time where people were just really falling into the FOMO and everything was getting hyped up with it. It had the classic bubble signs. Everybody was warning you, but everybody was just greedy who were buying into it and also really believed into project as well. So there was just a lot of positive press around it, feeling around Bitcoin, where it was going. Unfortunately, it's never recovered ever since. So this type of loss is called a paper loss, where you tell yourself that if I don't sell, I haven't lost anything. I haven't sold out of my Bitcoin position yet, but I am down. So if you haven't sold it yet, you don't really consider it a loss. But while this loss scenario is not in your pocket yet, or the reality is, it's still a major hit to you. And you still have to come up with a strategy about what you're going to do. So if you believe in the company's long-term prospects or the long-term value of what you've invested in, such as maybe Bitcoin as an example, it might be fine to add it to your long-term holdings if you feel like the project's still viable or the opportunity is still there. Well, on the other hand, this comes with another slide of, your opportunity loss, where if you sold out and took those losses, you can move that to somewhere else. And lastly, when coming up with how to deal with your losses in your investments, think it's really important to not lose sight, let your emotions take over, and lose just your judgment, good judgment when it comes to investing. If we look at it here from the percentage loss to the percentage rise to even break even, because a lot of us, I think, fall in that scenario. Well, the stock's down, I'll hang on to it. Hopefully it goes back to where it was, and then I'll sell out. Or, my strategy's long, and I'll just hang in there and see if it comes back. But if you look at it from this perspective, it takes a lot of effort for that stock or that investment to go right back to where it was. If you have an investment that's down 20%, it'll take 25% to break even. Now, if you have an investment down 40%, it'll take a 67% increase for it to break even. In a situation where it's down 50%, again, it's going to take 100% of that value to increase. So if you bought something, let's say Boeing, and it's fallen to 133 currently, and you bought it at 300, it's going to take over 100% for it to break even. So you've really got to assess what your plan is and what your strategy is to how are you going to mediate that so that you can be a really sound investor. So with that, I wanted to wrap things up and bring it back to where I currently am with the positioning of my fidelity and how I'm down with stocks and other stocks in general in my investments. These are some strategies that I found online of how to deal with your losses. So the first one is to consider is that no one wants to suffer any kind of loss, obviously. We go into it thinking we found a great investment. We did our research. But situations sometimes don't go your way. And you've got to let your ego go in the situation and make the right decisions. The best course of action is often, to cut your losses and move on to the next trade or next opportunity. After you've taken a loss in the market, try to lean from this and learn from your experience and figure out how this can make you a stronger and better and wiser investor. I believe that sometimes there are always blessing in disguises, or it's best to learn from your mistakes. Unfortunately, hopefully the mistake's not too big, but I think they do make you a better and smarter investor overall. And with that, you definitely want to analyze your choices and review the decisions you made with new eyes after some time has passed. What would you have done differently in hindsight and why? If you acted differently, and would you have lost less or perhaps nothing at all? Answering these questions to yourself may help you avoid making the same mistake in the future. Recoup what you lost. Tighten your financial belt for a while if you must. And if the loss is small enough, you may be able to recoup it with a little discipline. Regain that money and then try again. Keep in mind the things you've learned for the next time when the market gets shaky. And hopefully you have a more steadier hand and strong head. Don't let losses define you. Keep the loss in context and don't take it personally. These happen to all of us, even to the great Warren Buffett. Remind yourself that a lot of other people out there took a hit just like you did. Perhaps even more of a bigger hit than you. The loss doesn't define you, but if you can make it a better investor, but it can make you a better investor overall if you handle it correctly. So that'll wrap up the video, guys. Let me know what your thoughts are of how you handle stock market losses or investing losses. Or have there been situations where you've lost big and, how did you come back? How did you bounce back? Love to hear your feedback. Thanks for checking out the video. Hope everybody stays safe out there. Don't forget to hit the subscribe button. It really helps me grow my channel. Hit the like button as well. Talk to you all soon. Take care. Peace.